Hi, it's Terry Ryder from hotspotting.com.au, bringing you the weekly edition of Hotspot of the Week. One of my central themes in recent times has been, firstly, that there are many growth markets still occurring around Australia, and secondly, that a great many of them are in regional Australia, the areas that are so often overlooked by buyers of all types, but particularly property investors, which means they're missing out on some of the best buying opportunities in Australia right now, opportunities to buy at prices well below those in the capital cities, in areas with much better rental yields, and if you buy in the right ones, great prospects for capital growth. Now, it's been my often stated belief that the strongest market right now in Australia, and no matter how you look at it, whether in terms of sales activity or rising prices, or potential for good growth, is regional Victoria. And we've recently published our new edition of Top 5 Regional Victorian Hotspots. Last week, in this time slot, I talked about the town of Echuca, and tonight I'm going to talk about another location that's featured in the new edition of Top 5 Regional Victorian Hotspots, and that is the Mitchell Shire local government area. Now, one of the phenomenon that is driving the growth in regional Victoria, making it what I believe is the strongest market in the nation right now, is buyers, both home buyers and investors, out of Melbourne, looking either for a change of lifestyle or a more affordable one, or investments that have lower buying prices than Melbourne at much better rental yields and better prospects for growth, given that the Melbourne boom, generally speaking, has passed its peak and is well and truly winding down. So this brings the towns of Mitchell Shire into focus. We're talking about towns that are attracting hill change buyers and also investors looking for affordable buying prices and much better rental yields. I think the general theme is affordable lifestyle within commuting distance of the jobs nodes in the state capital city, Melbourne. With house prices, approximately half those you'd pay in middle Melbourne, but also considerably lower than what you now pay in the more affordable outer ring areas in Melbourne. And some of those outer ring suburbs of Melbourne, suburbs that used to have median prices, and say the 400,000s now have median prices in the 600,000s following the recent price uplift, keeping in mind that many of those areas actually prices are still rising, contrary to the general city trend, but first-time buyers are very active in those outer ring areas, still keeping prices quite high. So by comparison, the towns that I'm going to talk about, those hill change towns in Mitchell Shire, are looking pretty attractive. And some of them have median prices in the 400,000s, one or two in the 300,000s, and one of the major towns in that area has got a median price in the high 200,000. So looking pretty affordable for buyers out of Melbourne. One of the features here is good train links. That's crucial for people who are buying there with the view of buying affordably just outside of Melbourne and commuting back to Melbourne to work. The V-line train system stops at towns that I'm going to talk about a bit greater detail in a moment, such as Seymour, Tellerook, Broadford and Kilmore. It's quite a large shire north to south, depending on which one of those towns you jump on the train. You can be in central Melbourne in about an hour. But always keeping in mind that many of the major jobs nodes that people might be working in aren't actually in the CBD of Melbourne. They're in a lot of big jobs nodes in the northern outskirts of Melbourne, particularly in the suburbs in the north, close to the Metropolitan Ringway and the Hume Highway. So it's very, very feasible to buy an affordable property in one of these towns and commute either by road or by rail to jobs nodes in the north of Melbourne, but also the Melbourne CBD, which is about an hour away. In terms of distances, the town of Kilmore is about 70 kilometres from the Melbourne CBD. Broadford's about 87, according to these figures, 87 kilometres from central Melbourne, and Seymour's about 115 kilometres. So, acceptable commuting distance for many people. Currently, Mitchell Shire, according to the census in 2016 at least, had a population of 41,000. It's projected that within 10 years of that date, there'll be a 50% increase to 62,000, and another 10 years, the population will have increased to 89,000. So what's being projected by the official government forecast is that the population of this local government area from 2016, the 20 years up to 2036, is going to more than double. So it's going to rise from 41,000 to 89,000. It's known as an area that's a great place to raise kids, and that's reflected in the demographic data, showing there's a much higher percentage of the population of Mitchell Shire, which are people aged 19 and under, so in other words, kids and teenagers, people with young families choosing to live there, with that, that community country lifestyle. Number of towns are important. The administrative headquarters of the Shire are in the town of Broadford, but the major hospitals are in towns like Kilmore and Seymour. So the importance of the various towns is spread around the Shire. It's quite a diverse economy. It's something you always look for when we're thinking of recommending a regional location, not a capital city. We look for diversity in the local economy. I think it's very important, so that we're very much against recommending locations that are solely dependent on agriculture, for example, or wholly and solely dependent on the resources sector. They tend to be vulnerable and volatile markets. But Mitchell Shire has many different aspects to its economy. Manufacturing is the biggest single employer. Retail trade is strong. Government and administration and defence also strong. Tourism is very active. Agriculture and important equine activities. All these things have importance and employ a lot of people in this area. Manufacturing, there's food production, packaging products, equipment manufacture, and Mitchell Shire is home to a number of quite big name companies that are known around the country, such as Allen's Lollies, O'Dwyer's Horseshoe, and National Paper Industries. So it has some economic importance. So it's attracting people for its job opportunities, as well as its lifestyle and its proximity to the centre of Melbourne, and also, quite importantly, the Melbourne airport. Another element to the economy of Mitchell Shire is the presence of the largest military training centre in Victoria. That's Puckapunyal, just outside the town of Seymour, which is the main business and industrial centre for Mitchell Shire. Now, the property market has many aspects of interest for property investors and for home buyers. The first one is affordability. Median house price for Seymour, which, as I mentioned, is the main business and industrial centre, and close to the military training centre of Puckapunyal. Median house price for Seymour, $285,000, and typical rental yields about 5.5%. So that's the median. So it's possible to buy in Seymour and get perhaps a rental yields above 6%, given that 5.5% is the median. Broadford has a median price of $390,000, and Kilmore and Wayland have median prices around the mid 400,000. So in comparison to prices in the big city down the road, very, very attractive buying for buyers of all sorts. The other outstanding feature amongst many is that prices are growing very strongly here. In the last 12 months, Kilmore's median price is up 12%, Welland's up 13%, Broadford up 16%, and the town of Beveridge, which has a median price in the mid 500,000s, it's up 18%. These towns have also shown pretty good long-term growth rates. Some of them have averaged 6 or 7% per year for the last 10 years, which is a pretty solid average, particularly for country towns. Median yields typically somewhere between 4.5% and 5.5%. And the final feature worthy of note for this market is that all the main postcodes throughout Mitchell Shire have vacancy rates well under 2%. So they're all somewhere between 1.1 and 1.8%, which means the rental market's pretty tight. So if you're an investor buying in there and prices maybe in the 200 or 300,000s in a market that's growing with prices growing, the rental market's strong with low vacancies and pretty good rental yields, which are likely to go higher given the tightness of the rental market. The future prospects for this area, well, it's really all about population growth. It's going to continue according to the government projections to attract population with people, mainly people moving from other regions. Primarily, you would expect that people to be moving out of Melbourne looking for a hill change or a more affordable lifestyle. As I mentioned earlier, the 2016 census population is expected to double within 20 years to reach almost 90,000, exacerbated by people sort of priced out of the Melbourne market and aware that you can live affordably in some of these towns, and there's good transport links both to the centre of Melbourne and also to Melbourne Airport, and also to other key regional cities like Bendigo, Ballarat and Shepparton, and proximity to those major jobs nodes in the northern outskirts of Melbourne. And it's notable that the government projections, with the forecast increases in population, the towns expected to grow the most over the next 10 or 20 years are those that are closest to the city of Melbourne. So that's Mitchell Shire, and it's one well worth considering. It's a growing market with prices growing. It's attracting increasingly large number of property sales demand out of Melbourne, both home buyers and investors, and that's why it features so prominently in the new edition of the Top 5 Regional Victoria Hotspots report, which we have available on the hotspotting.com.au website. That's it for now. That's Hotspot of the Week for this week. Talk to you again soon. Let's do it again same time next week. Bye for now.